Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts that drive success. Today, we're talking about net present value, or an NPV, a fundamental concept in business that helps you make informed decisions about investments and projects. Whether you're a seasoned entrepreneur or just starting out, understanding NPV is crucial for unlocking the potential of your business ideas. So, what is net present value? In simple terms, NPV is a way to calculate the current value of future cash flows. It's a tool that helps you determine whether an investment or project is worth pursuing by considering the time value of money. Think of it like this: if someone offered you $100 today or $100 in 5 years, which one would you choose? Most people would choose the $100 today because they could invest it and earn interest over those 5 years. That's essentially what NPV does. It helps you calculate the present value of future cash flows so you can make informed decisions. The concept of net present value has been around for centuries, with roots in the work of economists like Irving Fisher and John Burr Williams. Over time, our understanding of NPV has evolved to include various models and frameworks, such as the discounted cash flow model and the capital asset pricing model. These models help us estimate the expected return on investment and calculate the present value of future cash flows. One influential thinker associated with the development of NPV is Warren Buffett, who has famously used this concept to make savvy investment decisions. For example, when Buffett acquired Coca-Cola in 1988, he used NPV analysis to determine that the company's future cash flows were worth more than its current market value. This insight allowed him to negotiate a better price and ultimately generate significant returns on his investment. Let's look at some real-world examples of net present value in action. Consider Amazon's decision to invest in drone delivery technology. By using NPV analysis, Amazon can estimate the future cash flows generated by this investment, such as increased efficiency and reduced shipping costs. If the present value of these future cash flows is greater than the initial investment, then the project is likely to be profitable. Another example is Google's acquisition of YouTube in 2006. At the time, many analysts questioned the wisdom of paying $1.65 billion for a video-sharing platform with uncertain revenue streams. However, Google's NPV analysis likely revealed that the present value of YouTube's future cash flows, driven by advertising revenue and user growth, was greater than the acquisition price. Today, YouTube is one of the most valuable assets in Google's portfolio. First, it's essential to understand that NPV is not a crystal ball. It's a tool that helps you make informed decisions based on available data. When applying NPV, be sure to use realistic estimates of future cash flows and discount rates, and consider multiple scenarios to account for uncertainty. One common challenge entrepreneurs face when using NPV is estimating the discount rate. This can significantly impact your results, so it's crucial to get it right. One strategy is to use a sensitivity analysis, which involves testing different discount rates to see how they affect your NPV calculations. You can also use tools like spreadsheet software or online calculators to streamline the process and reduce errors. Another tip is to consider the concept of hurdle rate, which represents the minimum return on investment required by a company or investor. By using a hurdle rate in conjunction with NPV analysis, you can ensure that your investments meet the required threshold for returns and align with your overall business strategy. Research has shown that companies that use NPV analysis tend to outperform those that don't. A study by the Journal of Finance found that firms that used NPV analysis to evaluate investments had higher returns on equity and lower costs of capital compared to firms that did not. This highlights the importance of incorporating NPV into your decision-making process. In conclusion, net present value is a powerful concept that can help you unlock the potential of your business or investment ideas. By understanding how to apply NPV in real-world scenarios, you'll gain a competitive edge and make more informed decisions about where to allocate your resources. Remember, every great business starts with a solid foundation, and NPV is an essential tool for building that foundation. As you apply net present value in your own business decisions, keep in mind that it's not just about crunching numbers, it's about telling a story with data. By using NPV to evaluate opportunities and manage risk, you'll be better equipped to navigate the ups and downs of the market and make informed decisions that drive growth. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.